Okay, GM guys. So it's me again. And today I'm just gonna be making a video on the video title would be something like trade correction. So the reason for this video is because I observed during yesterday I was just having a review concerning all the video I've made from the first video I posted on this channel, which was I think within 3 to 6 months ago. From that video up to the last video I made, I've seen a little, I've seen a bit of mistakes that I've made based on the whole trading structure and all that, or the whole trading idea. Not necessarily an intentional error, but based on the fact that it's kind of my first time doing all this, and I have also evolved in my understanding and knowledge. And there are some certain things I was doing then that weren't exactly absolutely correct. So I went over and over, and this is part of the reason why you should document your trade. This is part of the reason why you should have a journal or have something like a spreadsheet where you use in documenting your trade for backtesting, reviewing, correcting, and improving your skill set. Okay, it's gonna help you a lot. Okay, it's gonna help a lot. So the first thing I have, or the first thing I want to be talking about was a video I made. I think the that I first video I made, yeah. So yeah, okay, that was 5 months ago. So in this video, let's play it. Okay. So in this video, I basically said that this right here, this was our current range. I'm gonna show us in the chat. Made mention of that, and I said that that was our current range in that video on XAU USD. So I've already marked it out. So it's gonna be easy for me to spot out and just talk about it. So at that point in time, we've not had this. And let's take this out. Oh, oh, no, start the new. Yep, something like this. Okay, we have a lot of things on our screen. Well, okay, yep. So in that video, this was the range we were talking about. This is not the range, sorry. Kind of almost saying the same thing that I'm trying to correct. But in that video, okay, this was what I had identified as range, which wasn't a range. The reason for this is because of this. Now, what I defined as range is a validated break of structure. So let's say we have a bullish price, just as it just happening here. XAU was bullish and has been bullish, and this, okay. Now this was the current price action that we're looking at, just looking like something like this. Okay, just basically something like this. Okay, so I don't identify something like this as a range, except there is a break of structure. The break of structure of this current price action, or this current um yeah, let's just say price action. This high and this low, it's what validates it as a range. I do not see this is a range, except there is a break of structure above, which is the validation of this MB, which it makes it a range. Now there are two things that that you need to know. Number one, there's a validation of an MB. Number two, it's a mitigation of an MB. But what we are going to be talking about here is the validation of an MB, which makes that MB, or which makes that price action a range, okay, or which makes that particular body of price a range. It has to be validated. And how does it get validated? By break of structure? Okay, so let's say we have something like this. Now this would have made this price action to be identified as a range. So if we've had something like this over here, if we had something like this, then this was qualified to be called a range. Then at that point, maybe we should be looking at the POI, or whatever POI or whatever breaker block was around. as our point of interest, or and where we should be looking at entries, exits, and all that, and all that, and all that. But the mistake I made here was using this. You could see I wrote it there. So I was looking at this as my range. Meanwhile, it was not validated yet as an NB. Okay, it was not validated yet as an NB. So I'm going to take this out. So I already had this. Okay, so this was just a bullish price. It wasn't a valid mitigated price action that I should call a range. And the second thing I'm going to be talking about here was the fact that I was looking for price to calm down to mitigate daily this POI, this daily demand zone before validating this price action, before validating this as a range. But that was wrong. Let me explain. Let me explain. The reason I'm saying this is wrong is this. If you could remember the video we made, I think the last three video I made talking about the four major things based on my study, okay? So there might be more, but based on my study, we talked about the four major things that causes change of trend or that causes price retracement. The four major things that causes change of trend or price retracement. So we talked about the fact that number one, mitigation of higher time frame supply and demand zone. Number two, I think we talked about number two, we talked about absorption. Then we talked about double book of structures to the opposite side, and all that, and all that, and all that. Liquidity gap also. We talked about these stuffs of high time for liquidity gap. Talked about this stuff. I think we made mention of things that causes four things that causes um price to retrace, pull back, or change trend. Now, the thing is this in this price action we are looking at here is that there was no cause for price to come and mitigate this PI before taking this. And the reason is based on the four rules we talked about that causes price to pull back or price to change trend. Now, we can't say the mitigation of this liquidity that I had here was going to make price to come down, to retrace, mitigate this, and continue the trend, in the sense that this is an intermediary structure. Now, the reason why I call this an intermediary structure is that anything can happen here. Nothing has been validated yet. There is no break of structure to validate this, to make it in line with the higher time frame or institutional structure. Okay? Nothing has been validated yet. This is an intermediary structure, meaning price can decide to go to do this, calm down, go up, calm down again. Now, the only thing that would have caused for us to think otherwise or to think that, okay, we've seen price is going to be coming down here is if there was a higher time frame supply zone or a higher time frame liquidity that was grabbed. If we go to our 1 week, let's take a look at our 1 week. Yep. Let's take a look at our 1 week structure. So let me let's take this out. Now, take a look at the one big structure. Now, there is no formation here that indicates that price was going to pull back. There's no formation here that indicates that price was going to pull back. Or let me say there's no formation that indicates that there was a liquidity that has enough potential to pull back price to mitigate this supply zone before taking price higher. There was no formation, okay? There was no formation. So that's just what I wanted to correct about. Okay. Uh what's about to so that's just what I wanted to correct. The major thing I wanted to point out was that this was not a range. Okay. In that video, I made mention of the fact that this was a range. This was not a range because it hasn't been validated. there was no break of structure. In my book, in my understanding, based on my studies, what I understand as break of, what I understand or what I identify as a range or describe as a range is when there is a break of structure of price, okay? This now can be called a range. And what is the next thing I do when I identify my current price range is that I look for the POI of that range. It might be this, it might be a breaker block around here, it might be a breaker block around here. This is just what I identify as range. So while going through that video, I discovered that I identified this, I called this a range, why it wasn't mitigated yet. Why it wasn't validated yet. It wasn't validated. There was no book of structure, so there was no valid reason for me to identify this as a range. And secondly, again, let me make this clear in case maybe I've misquoted myself. Secondly, I wasn't supposed to be expecting sales to this side. I wasn't supposed to be expecting major sales to mitigate this before going up. Why? And I'm going to tell you why. Because one, there was no mitigation of a higher time frame supply zone followed with a double break of structure in the fast time frame to the opposite sides. So except there was a break of structure after, let's say, a mitigation of a higher time frame supply zone, POI, or liquidity with a double break of structure following, then I should have been confident on taking sales. Okay. Now, in this video, the funny part of this whole thing is that in this video, the trade played out fine. Like this was a completely bullish price, but I was actually taking sales. Now, I'm going to explain why something like this happened. Now, there are people that trade counter trend trades professionally and they actually make good ton of money out of it. The reason is this. When you stick to your rules, a proven rules of a proven system that has been backed by a lot of data that have been tested over time. Once you stick to your rules, you're going to make money out of it. So you could see that despite the fact that even the major concept, because based on my book, based on my understanding, after I've been able to identify my structure, the next most important thing is my institutional range, which this wasn't a validated institutional range, which I was calling a validated institutional range, but still, I was still able to make a good trade out of it. I think that was a 9 hour trade. The only mistake I made there was using the wrong closest liquidity as my TP. So that's just that on this video. Okay, that's just that on this video. So let's head to the next thing I want to correct. Okay, I think I have a lot. Okay, I think the next thing I made a mistake on, or the next thing I talked about was okay, the concept of absorption and liquidity gap. So I think I've used this term wrongly multiple times in the video I've made. Yeah. So I'm going to explain the difference between them. The concept of absorption based on my understanding and liquidity gap. So XAU is the best pair for me to explain this whole thing. Now, I'm just going to make it simple. This is an absorption of price. This because this you're seeing here, this is an absorption, and I will explain. Then this is liquidity gap. Uh, this, yep, this was liquidity, price grabs it, pulls back. Okay. What am I gonna use again? Um, this was liquidity, price grabs it, pulls back. Okay. So this is the liquidity gap. This is an absorption. This was low, price absorbs it, continue. Now, the difference between pullback and absorption is this. Now, when it comes to, sorry, not pullback, the difference between liquidity gap and absorption is this. Absorption, based on my book, based on my study, happens when price, uh, let's do this. Today's video is gonna be a bit long. Sorry. Today's video is gonna be a bit long. So let's say we have a bullish price. I don't know, think I'm not reasonable. So let's say we have a bullish price and price is going MB1, okay, MB2, so it's a validated bullish price. And price does this, okay. Now, okay, let's make this professional. Let's look at structure, second look at structure, so just gonna leave it like that. Second look at structure, so mm, understand why this whole thing is like this. Let's just make it beautiful. Whatever. So now, first book of structure, second book of structure. Now, based on my understanding, based on my book, this now, okay, is my range. Okay, this is my range, and this is my protected low. This is my protected low. So you could see that for me, there was no logical reason, or there should be no logical reason why price should attempt taking out this low. Okay, why price should attempt taking out this low. But you could see here that we had a week of this low. Okay, let's take it down a little bit. Yep. We had a like price wicked out this, wicked out this protected low. Now, it wasn't a break of structure. Okay, it wasn't a break of structure. It was an absorption of this low. Price absorbed it, then continues the trend. It wasn't the liquidity graph. Now, based on my understanding, based on my book, as absorption happens to protected low of a trend. Okay, so price comes, absorbed it, and continues. Okay, absorbed it and continues. So that's the meaning of assumption in my book, okay, in my mind, based on my understanding, based on my research. Okay, take this out, take this out. Yep, thank you. Yeah, so I've been able to identify liquidity graph. Okay, this was liquidity, price grabs it, continue. This was an intermediary low, protected low. Price absorbed it, continue. Okay, are two different things. They are two different things. So take note of that. So the next trade correction or the next correction I want to make is um the description of wake-up structure and also the description of wake-up structure and also change of trend. Now, this has been something I myself have been making a mistake of a couple of times now. Let's say we have a bullish trend. I like using a bullish trend. Okay, let's say we have a bullish trend. Now, these are breakup structures. Okay, these are breakup structure. These are breakup structure. Now, change of trend is different from breakup structure. Change of trend happens when price takes out a protected low with the body close. Okay, now note that it differs from Absorption. Absorption is a week out of liquidity below or at your protected low. Just a week and price continue, but it doesn't have a body close. But this now, we have something like this, a body close candlestick. Okay, so I say, yep. Now, this is change of trend. This is change of trend. So let's do a little leveling. So structure. Yep. And change of trend. Now, a lot of people call it change of character, whatever, whatever. So anything you want to call it, okay. So far as you understand what I'm talking about, change of trend. So I'm also going to put it here for you guys that understand this as change of character, if I'm not mistaken. Yep. Change of trend, change of character, whatever you want to call it, or you understand the whole concept. Okay. This is week of structure. Okay. This is week of structure. So let me do this. This. Yep. Um, and this is also a work of structure too. At the same time, it's a change of time. So let me do this. There's a work of structure. Yep. So yep. So same thing applies to here. Let's do this. Yep. So same thing applies to here. Okay. Um, Same thing applies to here. Do this here. It's down. Yeah. So these are break of structure. It happens often. Okay. Book of sort of simply identify or is simply telling you that there's going to be a price continuation, but change of trend, just as it implies, it's telling you that there is a change of trend. Okay, if price was uptrending, now maybe price is going to be downtrending. If price was downtrending, maybe now price is going to be uptrending. There are two different things. Book of structure majorly talks about price continuation of trend, but change of trend has changed. Okay, we're going to the opposite side of the previous trend. So these are the major things I have noted that in one of my videos or in our previous videos, we've made a mistake on get trying to um get my thought across to you guys. Okay, so this is just it, and if this video is in any way, if it was helpful to you to a trading journey, please do like and comment. Thank you.